So in the last class, and the topic we are still on is market structure, right?
Yes, we covered this market structure now. Yes,
Okay,
so
okay. We will still continue to look at the structures.
wait, okay, okay. Sideways.
Huh? I can't hear you.
You are saying that sideways market.
Okay, sideways. Okay. But before that, before we still want to jump on, we have to understand that know we need to know and understand our structures. So in this kind of structure now, what can we say this is our bullish market structure, right? And this is our bearish this is our bearish market structure. Because before you have a bullish market structure, before you have a bullish market structure, first of all you want to identify your low. And see, we have a low here, we have higher high, so with this structure we have a bullish structure here. So with this kind of structure now we can say this is a bullish structure. How are we able to identify a bullish structure? For you to identify a bullish structure, you have to know the components of what makes up a bullish structure. And in this scenario, we can say the component that makes up a bullish structure is higher high, right? And and higher low. So in this scenario, with these two insights, we have to know and understand that for us to have an higher high, it has to be an impulsive move. Impulsive move. And with our higher low will serve as a pullback for continuation. Our higher low will serve as a pullback or retracement, because it's still the same thing, pullback or retracement. So in this scenario now we can say with this bullish structure we want to say the components of what makes up a bullish structure. And with this bullish structure we are saying for us to see an higher high it has to be an impulsive move, and for us to see a higher low that means that is our pullback or retracement. So in this region now we can see we have identified our structure, the structure of the market, and it is obvious that this market we are seeing is on a bullish market. And with this bullish market we want to bring out our component to let us identify if truly this market is on an uptrend. And but obviously it is visible that it is on an uptrend, but the component is what will make us understand. Now when we want to see a low, we are experiencing a low, now we have a higher high. In this kind of movement now, this movement that created this higher high we are seeing is what we call our impulsive move. In this scenario, this is our impulsive move. This is our impulsive move. So for us to have an impulsive move, we must have a pullback. So that pullback or retracement is what gives us this higher low you're seeing here. You can see. So now we have an impulsive move, which is our higher high. For us to continue this upward movement, the market needs to retrace. So this retracement you are seeing is where people that intends to join the trend of the market, that wants to buy, this is where they anticipate the market to come back to, in order for them to join the trend of the market to create a new higher high, which is our new impulsive move. So now you can say, with this kind of structure, will you want to buy during an impulsive movement or a pullback? I asked the question, Mr. Do you want to buy the market in an impulsive move or a pullback move?
Pullback.
Exactly. We want to buy the market at a pullback, because we know that in a pullback we want to be anticipating to buy and join the trend of the market we are seeing. So with this pullback we are seeing now, we are anticipating to join the trend of the market. So we don't want to buy the market when the market is on an impulsive movement. And with this movement now, we can see the market has created a new higher high with this impulsive move. So now with this higher high, we expect the market, because anything that goes up will come down, we expect the market to come down. The coming down, the market is coming down, is the retracement, a pullback, which gives us this higher low. So after the formation of this higher low, for us to see another higher high, we need to break. We need to break. We need to take power from this person here, for us to have a new person in charge. And you can see with this formation, we experience a pullback. With that pullback that led to this higher high, we expect a new impulsive move. And if you look at the new impulsive move that happened here, it is what led to this new boss here that gives us this higher high. So as long as the market is respecting the components, what are the components? These are the components, the higher high, higher low. So in a bullish structure, you want to be seeing your higher high, your higher low, your higher high, your higher low. So with that higher high, you already know that this is an impulsive move. The market is making an impulsive move. And with the higher low, you know it's your pullback, a retracement for the continuation of the uptrend market we are seeing. So now, likewise, in a bearish structure, we also want to, the reason why we can't say pullback, retracement, pullback, the reason why we can't say impulsive move, a pullback, impulsive move, is because sometimes you might say the market just make an impulsive move and someone won't be able to understand whereby are you referring to an uptrend market or a downtrend market. But with an impulsive move, we just use it to understand the direction, the meaning of what the market is doing. Because we know if a market makes an impulsive move like this, it has created its higher high. With this higher low, it has made a pullback. So now we are saying with this structure of the market, we can be able to identify the market is on an uptrend market. And how are we able to identify that? With this higher high, higher low, higher high, higher low. So as long as the market is respecting structures upon structure, creating these components we want to see in an uptrend market, so we can now say the market is still in an uptrend market. So in a bearish scenario, what do we want to see? We want to be seeing same components but in a bearish version. And in a bearish version, we want to be seeing what? We want to be seeing a lower, we want to be seeing a lower high and what? A lower low. We want to be seeing a lower high and what? A lower low. So now you can see in this scenario now, where will be our impulsive, which one is our impulsive and which one is our retracement. Which one will be our impulsive move in this scenario and which one will be our lower low. So now let me identify this. For us to have a downtrend market, we can see an eye here. We have an eye. Why are we having an eye here? Don't forget, when we are able to identify this structure, we want to see a low first. We're seeing a low, and it's this low that gives us this higher high. So after this higher high, the market gives us a pullback that gives us this higher low. So in the bearish market, in the bearish market structure, which is this, in the bearish market structure, which is this, we want to see a high first. So this high now, we can now say we are now seeing a lower low. A lower low. And if we see a lower low, we want to see what? A lower high. You can see, sorry. This is our lower high. So with this lower high, we expect to see a new lower low. So with this lower low, we still expect to see what? Another lower high. You can see now. So you can see we want to see our higher lower high. So in this scenario now, which one is our impulsive move and which one is our pullback? I want someone to tell me. Which one is our impulsive move? Which one is our pullback? Is it the lower low or the lower high? So I want someone to be able to identify it for me. Staditola, are you going to try? Staditola, are you there? Staditola, are you there? Huh?
Are you with me?
Yes, I'm with you.
From our lower to lower statement, why from our lower out to our lower is important.
Exactly. Thank you very much. From this, we have an eye here. This is where our impulsive move started. This is where our impulsive move started. Started from here and it ended here. So in this scenario now, we can say this is our first impulsive move. Now we add a pullback. So this pullback, in this scenario now, we can say this is the lower high. The lower high is the pullback or retracement. While the lower low in this scenario is our pullback. The lower high in this scenario is our retracement or pullback. So while the lower low in this scenario is our impulsive move. So now if you see that with this lower low, we can say that the market made an impulsive move. So now the market created a lower high. So this serves as a pullback for sell continuation. So after this lower high, we expect the market to give us a new impulsive move, which is our lower low. You can see the market gave us a pullback again that led to this lower high. So after the formation of this lower high, we now have a new lower low. So as long as the market is respecting the components of these structures in this bearish scenario, so in the bearish market, you want to be seeing a lower low, a lower high, lower low, lower high, lower low. So in a bullish structure, what do you want to be seeing? You want to be seeing a higher high, higher low, higher high, higher low, higher high, higher low. So in a situation whereby you are not able to identify the direction of the market, you can see with this kind of situation now, how are we going to say who is in control in this kind of situation? No one is in control. That's why it is equilibrium between the buyers and the sellers, between the demand and the supply. No one is in control. That's why in this scenario, both the money the buyers are willing to trade and the sellers are willing to trade are in equilibrium, are equal. So that's why it shows that no one is in control until we experience a breakout. And with this breakout now, we can see clearly that it seems the sellers, it seems the buyers want to take control. And if we bring out our components, bullish components, we can say this is our low. Yeah, this is our low, which was the last low. And now it's now since the market has given us, and now it now seems the market has given us an higher high. So with this kind of scenario now, we can say it seems there wants to be a breakout, a change, a trend for the buyers. But if this didn't happen, even if it's on a bearish scenario here, even if it's on the bearish scenario, it's still same thing. So what we want to see is we want to know who is in control. Now in the bearish scenario, we are experiencing a ranging market or a sideways market. This is our high, but this market is not ranging anymore. We add a breakout to the downside. Sorry. So now this market is not, I'm sorry. So now you can see we have a high and a breakout here. So in this scenario, what can we say happened? We can say, if we are bringing out our bearish component, we can say we have a high here, and now this low you are seeing is our lower low. So the market created a lower low. So now in this scenario, we can say it seems the sellers wants to take over. You can see I give an example for the bullish scenario. Now I'm giving an example for the bearish scenario. So that's why we have three types of how the market structure works. So the first is bullish, the second is bearish, and the third is ranging, which is the sideways market. And the third is ranging, which is the sideways market. In a sideways market, no one is in control, equilibrium. But in a bullish market, the demand to keep pushing the price up is high. So that's why we are saying this component, these bullish components, higher high, higher low, higher high, higher low. But in a bearish structure, what do we want to be seeing? We want to be seeing lower high, lower low, lower high, lower low. So with that formation, we can say the sellers are much. The willingness of the sellers to push the price down is high. So any questions so far before we go on chat? Any question? Any question? Any question? No question. Any question?
No question, sir.
Okay. So now, if there's no question, let's go on chat and look at our examples on chat. So now we can see, let's look at what happened with this market now. Now, with this structure, you can see how we've been able to, before this, we are experiencing a downtrend market here. But look at this structure. We identify our low and we have a higher high. So with this higher high now, this is our impulsive move. So with this higher high, we are experiencing a pullback. We are expecting a pullback. And the pullback we are experiencing in this scenario is our higher low. And now you can see, we now have our higher low. After the formation of this higher low, we have another impulsive move to the upside that gives us this higher high. So with the creation of this higher high, we now experience a higher low. So with this higher low, we add another higher high. So in this scenario, we can say the market is on a bullish trend until you are not seeing what you are meant to see. After this higher high, what are we expecting? We are expecting the market to come back and give us that pullback, to give us a new higher high. But look at what happened here. The market did not give us what we want to see. Instead, the market violated this place, this last higher low here. You can see, because this place will have been a key zone for buyers to continue the upward movement of the market. But what happened? The buyers were not able to hold this place. So now this place has been violated. As this place has been violated, what are we anticipating? We want to anticipate it since there is a change of trend. And with a change of trend, we have seen a high here. We have seen a high. Now, with this high, we now experience an impulsive move, which gives us this what? Lower low. And with this lower low, we expect price to give us a pullback back and give us a new lower low. But look at what market did. Market did not give us that. You understand? You can see market did not give us that, because this, what happened here, shows the unwillingness of the sellers. They were really strong enough. And if you look at this, the candlestick pattern that happened here, what's the candlestick pattern that happened here that led to this upward movement? It's a 3 candlestick pattern. Confirmation. There is a particular candlestick pattern that led to this upward movement that shows the willingness of the buyers to continue.
The 3 white soldiers.
No. It's not a 3 white soldiers. There's actually a 1, because firstly we are experiencing bearish. We had something here, but it's, what I'm saying is a 3 candlestick pattern that led to, we know that with 3 white soldier is a momentum candle, but that's not what led to the change of the trend we are seeing, like that led to these buys to push up. there's a three candlestick pattern. I want someone to tell me. This is for the first one, the second one, and the third one. The first one is the bearish candle, the second one is this middle one, and the third one is this. Mr. Adetola, you don't know it as well?
This one, sir.
Exactly. That's what I want to. Thank you. It's a morning star. You see how our candlestick pattern is very, very important. There's no how we want to understand the structure of the market, or there's no how we want to join or take a trade without understanding what the market is saying, without using our confirmation. So with this now, you can see how the buyers, the sellers, they failed. And with this scenario, we did not see what we want to see, because we know that after this lower high, we are expected to see a new lower low. But instead, that did not happen. What happened here? What happened here was this is a high instead. Sorry, we had higher low, lower high, lower high. So now we can now see that what happened here, we experience a low here. We can't say this is a lower low because it did not violate this one. So it is still a low here, and after this low, we now have an impulsive move that led to this higher high. You can see how the market changed forms again. We had a low here, and this is our new higher high. So with this higher high, we expect a pullback that gives us this what? This higher low. And with this higher low, we now experience a new higher high. We experience a new higher high. So with this higher high, the market gave us a pullback. And continue its upward movement to give us a new higher high. You can see how high this is to give us a new higher high, breaking this previous structure there. And with this higher high, we still experience, what are we anticipating again? We expect the market to give us a pullback, which is our higher low, to continue its upward movement. Market gave us a new what? The market gave us a new higher high again. So as long as you are seeing the component that makes up a bullish structure, and with a bullish structure, what do we want to be seeing? We want to be seeing higher high, higher low, higher high, higher low. So as long as that component is respecting the structure of the market, we can still say, okay, the market is in a bullish trend. So with this pullback now, with this little pullback, this is what? Our higher low. We still have a continuation again to create, you can see, a continuation again to give us. So you can see how the market is, how it is obvious to understand this structure of the market. With this structure, we have a new higher high here, and we still expect the market to give us a pullback, and the market gave its pullback to create a new higher high here. You can see. So in the bullish structure, we want to be seeing the components. The components we want to be seeing is higher highs, higher low, higher high, higher low, higher high, higher low. In the bearish scenario, what do we want to be seeing? Lower high, lower low, lower high, lower low. So now, this is the bullish structure. Now let's look at an example of the bearish scenario. Now look at this. The high, So now look at this. We have, with this market, we can see we have an high, we have an high, we have an high here. Sorry. We have an high, we have a lower low here. We have a lower high, right? We experience a new lower low, a lower high, how are we able to identify this is a bearish structure? Because we are seeing the component that makes up a bearish structure market. And in a bearish structure market, we want to be seeing our lower highs, lower lows, lower highs, lower lows. And you can see how visible it is here. You can see how visible it is here. So in this scenario now, you can see this is our impulsive move. We had a pullback. The pullback we had here is our lower high. So after this pullback or retracement, we have a new impulsive move, and the impulsive move here is what led to this our lower low. You can see we had a lower low, and with this lower low we expect a pullback. So as long as structure is breaking structure, in this scenario we can see what led to this new impulsive move is, for us to make this a valid impulsive move, it has to break the lower high that created, that served as pullback. The new impulsive move that is creating has to break the previous boss here. And with this scenario, you can see how this impulsive move broke the previous lower low here. And breaking it confirms that we have a new boss in town, which is this. You can see. So structures upon structures. With this lower low, you can see the pullback we had again. We had a lower high. With this lower high, what do we expect again? We expect this boss to be taken out, to have a new boss. You can see after this lower high, after this lower high we had, the new impulsive move that is making its formation broke this low. So that tells you, for us to have an impulsive move, it is until the previous lower low has been broken. And with this place, you can say this is our swing point. So until the previous lower low is broken, for us to confirm if this new leg we are seeing is valid. And after that is broken, you can see that is what led to this new lower low we are seeing. So in a bearish market, what would we want to be seeing? We want to be seeing structures breaking structures. And with the components of a bearish structure, we want to be seeing lower high, lower low, lower high, lower low. As long as it is visible on our chart, what we are seeing, we can be able to understand the structure of the market we are seeing. So you can see, again here, we experience a pullback here to continue the downward market, a pullback to continue. So on and on and on and on, as long as the market is respecting structures. And how are we able to identify this? Using the component of what makes up a bearish or bullish structure market. So any question? Any question? So now let me identify this. So this is our lower high. So we have a lower low here. We have a lower high. And we have a new lower low here. So you can see structures, breaking structures. So any questions so far before we call it a day for today's class? Any question? Any question? So you can see how we've been able to identify both the bullish structure, giving us a peculiar example of what makes up a structure of the market. Because you want to open your chart, the first thing you want to do is to identify the structure of the market. The market structure we are seeing here is the market in a bullish market, or is it in a bearish market, or is it in a ranging market? And with a bullish market structure, you want to be seeing the component that makes up the market being bullish. And in this scenario, what makes up a component of market that is on a bullish market? You want to be seeing higher highs, higher lows, higher highs, higher lows, structure breaking structures. In the bearish scenario, what do you want to be seeing? Lower highs, lower lows, lower highs, lower lows, structure breaking structures. So as long as those components are respecting, as long as the market is respecting those components, we can still say we are in a downtrend market. So in a scenario whereby we are not able to identify who is in control, is where we have a sideways market, which is what we'll be looking deeply into in the next class. So this is a sideways market, and in sideways markets, so there are also three things you need to know. The first being demand, second, supply, and third is equilibrium. So with these three, we can say in this bullish market structures, we can say the demand is high, and if the demand of a particular market is high, that's when we want to be seeing uptrend market. So sometimes when you see a market, you open your chart and you see a market is buying to the upside, the demand to push the price up is high. So there are a lot of participants, the market participants we have, like the banks, the retail traders, which is us, investors, everybody, their only interest is to buy that particular market. So we can say the demand for that particular market is high. That's why we are seeing an upward market, an uptrend market, a bullish market. So it seems the demand for that particular market is high. So when a demand for a particular market is high, obviously it will be going up. And with supply, there's no how we have a demand without a supply. With supply, it's the availability of what we want to sell. So you have it and you want to sell it. So with the supply, we can say that is when we can experience a downtrend market. So the willingness of people selling off a particular market is what led to the bearish market we are seeing. So what now happens if both the demand and supply are of the same thing? That's what gives us equilibrium. That's what gives us this. And with equilibrium, what do you want to be seeing? That's when you experience a sideways market. There's no one in control. You can see how these three interchange to one another. So in a demand, you want to be seeing, you are seeing a bullish thing. People who are really interested in that particular market they are high. With supply, we are experiencing sales. the amount of people, the amount of participants interested to sell that particular market is high. So that's why we are experiencing the downtrend market. So it means that once we have an impulsive move like this, which is our lower low. So with this lower high is like our supply zone. So people who are interested to sell this particular market, this is where they are anticipating to sell in order for us to join the trend of the market. So that tells you that even if you want to join the trend and you are looking to buy or to sell, you don't want to buy or sell in an impulsive movement. You want to buy when the market gives you a pullback or retracement so that you can join the trend of the market. So any question again so far before we call it a day? So any questions so far?
Yes. Can you hear me?
Yes, I can hear you.
Yeah. For me, the uptrend seems to be a little bit easier to understand
Okay.
in the sense that you buy low and then you sell high.
Yes.
On the other hand, the bearish market structure is a little bit confusing. If you don't mind, how can we make profits when we buy in the downtrend, meaning bearish market structure?
Okay.
Because what are we trying to accomplish at that very particular time, and how do we go about it?
Okay. Thank you very
I,
much.
I hope that is clear enough.
Yeah, it's very, very, very clear. Very, very clear. So, we know the kind of market. Sorry, we know the kind of market we trade is the forex market. So simultaneously, you can buy a market in an uptrend market, and you can also sell a market in a downtrend market. The only market you will be interested in buying is if you are trading on the crypto market. So with the crypto market, you can say you want to buy and hold. For example, you want to buy Bitcoin, for example, you'll be looking to buy the BTC. But in Forex, in the financial exchange, we can buy. If we are buying, we are making profit. If we are selling, we are making profit. So in the sell scenario here, if you are experiencing a downtrend market, a bearish market, you won't look to be buying, you will be looking to be selling. So in the bullish scenario, you will be looking to be buying in the bullish market. So likewise in the bearish market, you will be looking to be selling. So sir, with the question you asked, I don't know if what you trade is maybe crypto or forex market. Can you clarify on that, sir?
Let's say forex.
Okay, forex. Sure, obviously. So with forex markets, let's say this particular pair as an example. Do you know there's a way whereby we can sell this market? Obviously, you can even see there's a button here, buy or sell. So if you are selling a market, if you want to sell this particular market now, maybe let's assume this market is on a downtrend market. So in a downtrend market, the only interest we are interested in is to sell. And with sell, we are opening a position, a sell position. So if you are opening a sell position and we enter our position here, we are, once the market is giving us that impulsive move we want to see, we are already in profit. So in a bullish structure as well, the only interest we are interested in is to buy alone. So and if you are buying, you want to be buying at a pullback or retracement in order to join the trend of the market. So this is the zone you are interested to buy. So that's why you only want to buy with the trend of the market. If you are seeing a bullish structure, your only interest is to buy. And if you are seeing a bearish structure, your only interest is to sell. So the way we can make, okay, for example, you can't open For example, let's say with Euro USD, you can't open a buy and sell position at a time. No, you have to choose. You have to choose a part. If you are seeing a bullish structure, the only interest you want to do at that particular moment is to buy that particular pair, and that's where your risk management comes in. Your stop loss, take profits is intact. So in the bearish scenario as well, the only interest you want to be interested in is to sell a particular market. And if you are selling, you want to sell at a pullback or retracement with this lower high here. So let's assume with this structure, we want to sell this particular market. We experience a lower low, and with this lower low, we expect a pullback. So we are joining the pullback of this market, putting our stop loss above this previous lower high. So you can see how we'll be able to profit from this particular structure. So that tells us that in a bearish market, the only interest we are interested in is to sell the market alone. Likewise, in a bullish structure as well, if you are buying, the only interest we are interested in is to buy. So you can see, in a bullish structure we are buying, in a bearish structure we are selling. So that answers the question, sir. So that,
Yes.
all right, sir. So in the next class we'll be looking more into sideways market, and where we'll keep refreshing our views on bullish structure and the bearish structure. So any other question before we call it a day?
Um, are you are you going to tell your students when to open like demo accounts?
Sure, definitely we will when the time arises.
Okay.
Yeah.
All right.
All right, sir.
Thank you.
All right, sir. Thank you very much, sir. So that will be the end for today's class. Thank you very much. Enjoy the rest of your day, sir.